Paul Christopher, looking internationally, you say don't ignore Southeast Asia, Australia, or New Zealand. Now, if China is slowing, why not?
Well, look, these are economies, markets that have for centuries been trade-oriented. Now they're adding more diversification to their own economies, domestic spending and inflows from the rest of the world. Even if China slows down, even if global trade is a little bit on the weaker side, they've still got that domestic spending power to boost them along. So you've got different bets made in this part of the world.
Well, in Southeast Asia, they're also attracting a lot of Chinese manufacturing because they're offering lower wages and less regulations. But how long can that last?
That's really a long-term story. China's wages are only going higher, not lower. We're going to see more outsourcing in the years to come.
And with regard to Australia, copper is falling. I know gold's up a little bit this year, but for other reasons. Don't they need a commodity boom to get that economy going again?
Well, that commodity boom was really in terms of investing in the mines. That mine investment boom is now coming to an end, but now they've built all that capacity, they're going to continue to ship iron ore, coal, copper, and other metals to China. China still has a lot of building yet to do.
So how do you, over at Wells Fargo Advisors, take advantage of this? What are you buying? Stocks, ETFs, funds? How are you making money off this play?
Well, look, our investors don't want to have to pay attention to the world country by country. What we try to do is get them into ETFs that are broadly diversified and have low cost, or mutual funds that have the same advantage and that may even take it managers and put them on the ground in these countries so they can get into and out of these stocks as appropriate. That broad approach, that broad diversification at low cost, we think is the best way for a retail investor.
And then what could screw up your prediction? I know there's a lot of worries about China and Japan fighting over those islands that really don't matter that much to the U.S. unless it draws us into a big fight over there. What could really turn your thesis on its head?
The main risk to our thesis that these are good places to add to your portfolio is that we might have some big global disruption. Now, I'm not worried about Ukraine and Russia. I am more concerned a little bit about China, that it might have some unexpected disruption in its economy as a result of the reforms that they're trying to implement over there. I don't think that's the most likely story, and I want to continue to advise investors to consider this part of the world, but that's the main risk.
All right, thanks a lot, Paul.
Good.
Thank you for watching The Street.